Welcome, everyone. If you're tuning in, chances are you're exploring the idea of investing in Airbnb properties, and maybe you've got your eyes specifically on Kata in Phuket.
That's right. And if that's you, you're in the right place. Today we're doing a deep dive into exactly that, the kind of rental yields you might realistically expect for Airbnb investments right there in Kata.
And we're grounding this discussion in some really solid expertise.
Mm.
We're drawing heavily on insights from Ocean Worldwide. They're a luxury real estate agency actually based right there in Phuket since 2004.
Yeah, they have a serious track record. Sandra O'Neill, the director, has guided literally thousands of families and investors over the years. They really know the local market inside out.
Especially the luxury residential side of things, not just in Phuket. And just for clarity, that's pronounced Phuket, not Phuket, but also over in Koh Samui too. So their perspective is invaluable for this.
Definitely. So our goal today is pretty straightforward. We want to give you a clearer picture of the typical rental returns for both condos and villas in Kota.
We'll look at how tourism shapes things, why the exact spot in Kata matters so much, and, crucially, the difference between gross and net yields. That last one's really important.
Absolutely. By the end, you should have hopefully a much better feel for the landscape to help you make those informed investment choices.
Okay, let's start broad then. What's the general picture for rental yields across Phuket right now?
Well, Phuket's property market is pretty lively. A big driver is the strong year-round tourism, naturally. But we're also seeing more people choosing Phuket for remote work. That trend is definitely adding to the mix.
So more demand generally.
Yeah, but yields really do vary. It depends a lot on the type of property and, as you'd expect, exactly where it is.
Location, location, location. Always.
It never changes, does it? Generally, though, condos in the really popular spots, think Patong, Kata itself, Rawai, they offer pretty decent returns.
Especially during the high season.
Exactly. November to April, that's when rental prices can really jump. But it's always smart to watch the overall market trends, too, see how things are shifting.
Okay, let's zoom in on Kata then, thinking about different property types there. What does Ocean Worldwide's experience tell us about condos, specifically in Kata? What kind of yields are we talking?
Yeah, so based on their deep local knowledge, Ocean Worldwide suggests that for condos in Kata, you're typically looking at gross rental yields somewhere in the range of 5% to 8%.
5 to 8% gross. Okay.
Yeah.
Can you give us a feel for what that means in actual rental income?
Well, just to give a sort of benchmark, maybe looking at a similar dynamic in nearby Kathu, not Kata itself, but comparable, a decent one-bedroom condo might rent for, say, 13,500 up to maybe 18,000 Thai baht per month. That gives you a rough idea.
Right, a ballpark figure. Okay, and what about villas in Kata? I'm guessing they're a different proposition yield-wise.
You're spot on. Villas generally offer the potential for higher yields in Kata. We're talking more in the range of 7% to perhaps 10%.
7 to 10% gross. That's a noticeable step up.
It is. And just to show the top end, especially in the luxury market, that Ocean Worldwide knows so well. Think high-end villas, maybe in areas like Thalong or Muang Phuket, again, broader Phuket context here. Those can command monthly rents between 120,000 and, well, even up to 220,000 Thai baht. It really shows the potential at that premium level.
Wow, okay, that's significant. What if an investor isn't targeting the short-term holiday market, but maybe longer-term rentals in Kota?
Yeah, that's an option too. For properties maybe a bit further out from the absolute tourist center in Kata, long-term rentals might yield around 5% to 7%.
So potentially a bit lower yield, but maybe more stability, less turnover.
Exactly. It's often seen as a trade-off. Lower yield, potentially, but often less management hassle and more consistent income month to month.
Now, Kata being such a prime tourist spot in Phuket, mega seasonality must play a huge role. How dramatically do those tourist seasons impact yields?
Oh, massively. The impact is really profound. Understanding these seasonal swings is absolutely fundamental for any investor in Kata. Ocean Worldwide really stresses this based on their years there.
Okay, let's break it down. High season, November to April. What does that look like for rental income?
That's prime time, peak demand. You've got the biggest influx of tourists, the best weather. Kata is buzzing.
So occupancy is high and rates go up.
Way up. Rental prices can easily double, sometimes even triple compared to the low season. It's when you aim to make the bulk of your annual income.
And then comes the low season, roughly May to October. A different story, I imagine.
Definitely a different story. You typically see more vacancies, and rental rates have to come down to attract the visitors who are around. The weather can be less predictable, fewer tourists overall.
So you absolutely have to factor that dip into your calculation.
You have to. If you budget based on high season income year round, you're going to be in trouble. It's just not realistic for Kata.
What about the bits in between? The shoulder seasons.
Yeah, the shoulder seasons, sort of spring and autumn, if you like, they can be quite interesting. You often get decent demand, maybe not peak levels, but still good.
And the rates.
Rates are usually somewhere in the middle, better than low season, not quite the peak high season prices. It can offer a nice balance, actually. More steady occupancy sometimes.
So it sounds like getting a really good handle on these seasonal flows is non-negotiable for investing in Kata.
Absolutely non-negotiable. It affects everything: your pricing, your cash flow planning, your marketing focus throughout the year. You ignore it at your peril, really.
Let's dig into the specific things that push those yields up or down in Kata.
Hmm.
Location within Kata seems like it would be top of the list.
Oh, it's paramount. Crucial. Ocean Worldwide, with all their experience, they hammer this home. The closer you are to the main attractions, the beach, obviously, but also shops, good restaurants, tourist spots, the higher the rent you can charge.
It's all about convenience for holidaymakers, isn't it?
Exactly. People are on holiday. They want things easy, walking distance to the beach, easy access to dinner options. That's what they pay for. That convenience factor is huge in Kaita.
Makes perfect sense. So prime spots command premium prices.
It's classic supply and demand. Those best locations will almost always have strong demand, letting owners push rates higher.
We touched on property types, condos versus villas. Let's revisit that specifically for the Kata market. What are the pros and cons yield-wise? Condos first.
Okay, condos in Kaita. Often they're a more accessible entry point, right? Lower purchase price usually. And they can be a bit easier to rent out consistently, maybe because the rates are more competitive. Plus, the upkeep can be less of a headache for the owner, especially if there's good building management.
Maybe a ceiling on the income potential compared to villas?
Generally, yes. Solid returns are definitely achievable, but maybe not the super high figures you might get with a luxury villa.
Okay, so villas in Kata. What's the yield story there?
Villas, particularly those with private pools, multiple bedrooms, they attract families, larger groups. People often pay a premium for that space and privacy.
So higher income potential.
Definitely higher income potential. But as Ocean Worldwide points out, the purchase price is higher and the running costs, maintenance, gardening, pool care are significantly more.
Especially for those luxury ones in prime spots.
Exactly. Top tier rates, yes, but also top tier costs. You need to budget for that. It's a trade-off you have to weigh up carefully.
So it's higher potential income with villas, but lower entry and maybe easier management with condos. How does seasonality hit these differently in Kata?
Well, that high season surge lifts all boats, really. Both condos and villas can charge much higher rates and expect good occupancy.
But the low season dip might hurt more.
It can. The drop in demand affects everyone. You might find both property types have longer empty periods during those quieter months.
Do investors try to counter that? Maybe with longer lets in the low season?
Some do. They might switch to offering monthly rentals during the off-season just to keep some income flowing, even if the yield is lower than short-term lets.
So it comes back to understanding those tourist flows again.
Always. It's the lifeblood of the short-term rental market in Kata. You have to track those trends.
Now, we've thrown around percentages like 5-8% or 7-10%.
Yeah.
But those are gross yields, right? It's vital investors understand what that actually means and what it doesn't mean.
Absolutely. Critical distinction. Gross rental yield is just the starting point. It's the quick, simple calculation before you account for any expenses.
How do you calculate it again?
You take the total rent you expect to receive over a whole year, your annual rental income.
Okay.
You divide that number by the property's purchase price, then multiply by 100 to get the percentage. Simple as that.
Can you give us a quick example? Let's use BAT.
Sure. Let's say you buy a condo for 6 million baht, and you figure it'll bring in 45,000 baht a month in rent.
Okay, so that's 540,000 BAT for the year.
Exactly. So 540,000 divided by 6 million times 100. That gives you a 9% gross yield. Sounds pretty good on paper.
But gross is the key word. It ignores all the running costs. Which brings us to net rental yield.
Precisely. Net yield is the number that really matters. It tells you your actual profit after you've paid for everything needed to run the rental.
Like what sort of costs?
Oh, quite a list. Property management fees, especially if you're overseas.
Right.
Maintenance, repairs, insurance, property taxes, maybe condo fees, cleaning costs between guests. All that stuff adds up.
So to get the net yield, you first subtract all those annual costs from your gross annual rent.
Correct. That gives you your net annual income.
And then you divide that net income by the original purchase price times 100.
That's the one. And understanding your net yield is vital. It shows the true profitability.
And helps compare different properties fairly.
Exactly. You can compare apples with apples, investment-wise. It's also crucial for realistic financial planning. Ignoring costs gives you a false sense of the return. You really can't afford to overlook them.
Can we do a quick comparison using that 9% gross example? Show the difference net makes.
Okay, let's take a slightly different one. Say an 8 million baht property, gross annual rent 720,000 baht. That's 9% gross yield again.
Right.
Now, let's say the annual running cost management, maintenance, taxes, insurance, the works come to 120,000 baht a year.
Okay, so the net income is 720,000 minus 120,000, which is 600,000 baht.
Correct. Now calculate the net yield. 600,000 divided by the 8 million purchase price times 100.
That comes out at 7.5%.
Exactly. So the realistic return is 7.5%, not the 9% you first saw. That difference is huge, especially for something like a nice sea view condo in Kata where upkeep might be a factor.
Definitely paints a much clearer picture. Okay, let's circle back to tourism's impact on Kata. That high season demand, how big is that influx really?
It's genuinely massive. November to April sees Phuket and particularly popular spots like Kata flooded with tourists, both international and Thai.
And that directly fuels occupancy and rates.
Directly. Occupancy shoots up, and owners can and do charge premium rates. Ocean Worldwide stresses that understanding this peak demand is key. You need to price strategically.
Right, capitalize on it.
Especially if your property is in a prime spot near the beach or key attractions in Kata, those places really benefit.
Is it just about raising prices or offering more value too?
That's a great point. Just hiking prices isn't always enough. Offering something extra better service, unique amenities can help justify the premium and make your place stand out when competition is high.
We also have to think about the flip side, unpredictable global events. How vulnerable is a place like Kata to those? We saw with the pandemic.
Extremely vulnerable. Events like pandemics, major economic downturns, even political instability elsewhere, they can hit tourism-reliant places like Kata hard and fast.
Travel bans, economic uncertainty.
Exactly. It can lead to sudden drops in visitors, high vacancy rates, and plummeting yields. We saw properties sit empty for long stretches.
But there's potential for recovery too.
Oh, absolutely. As travel rebounds, places like Kata often bounce back strongly. But it underlines the need for investors to be adaptable.
Meaning
Being ready to adjust prices, maybe offer more flexible cancellation terms, really focus on things like enhanced cleaning to build confidence. You need that flexibility to navigate the bumps.
and looking further ahead, what's the general long-term forecast for tourism in Phuket and Kata specifically?
Broadly, the outlook is pretty positive. There's ongoing infrastructure development talk of airport upgrades, better roads, which should attract more visitors over time.
But potential challenges too.
Definitely. Increased competition from other destinations is one, and the growing focus on sustainability is huge. Travelers are becoming more conscious of environmental impact.
Now, investors need to keep an eye on that.
For sure. Things like new transport links, opening up different areas, changing tourist demographics, the demand for eco-friendly options, these will all shape Kaida's future tourism market. Staying informed is key.
Okay, let's talk specific investment opportunities in Kata. What property types are really popular for Airbnb investors there?
Well, condos are always popular, especially those with sea views or super close to the beach. Easy to manage, appeal to couples or small groups.
And villas.
Villas remain a big draw, particularly for families or groups needing more space. Private pools are a huge selling point.
Anything else? Land, maybe.
Yeah, Ocean Worldwide notes that sometimes land comes up, maybe in areas slightly outside the main Kata hub, like the Long. That might appeal to investors wanting to build something bespoke, tailored to current trends, but that's a bigger undertaking, obviously.
What about the overall market trends in Phuket right now that Kata investors should be aware of?
Well, the influence of tourism, infrastructure, the economy, those are the big ones. We're seeing the rise of digital nomads looking for longer stays.
Ah, interesting. So not just short holiday lets.
Exactly. And at the same time, traditional international tourists are returning, boosting the short-term market. So it's a bit of a mixed picture, which investors need to track. Watching which areas of Phuket are getting new investment or becoming popular is also smart.
And what about the potential for property values to actually increase in Kata? Capital appreciation alongside the rental yield.
That's definitely part of the appeal for many investors. Kata's popularity and the limited land available mean that well-located properties have strong potential to increase in value over time.
So it's not just about the rental income stream.
No, for many, it's a dual strategy. Generate income now and hopefully see the asset grow in value for a future sale. Infrastructure improvements nearby can really boost that potential too. Looking at areas where development is planned can be a savvy move.
Okay, we've painted a pretty positive picture in many ways, but let's be realistic. What are the big challenges investors face with Airbnb and Kata?
Absolutely need that balance. A major one is property management costs. If you're not living there, you need someone reliable on the ground.
To handle cleaning, check-ins, maintenance.
All of it. Guest communication, emergency repairs. And those management fees eat directly into your net profit. It's a significant ongoing expense.
It's important to shop around for management companies.
Definitely get quotes, but don't just go for the cheapest. Quality of service is crucial for guest reviews and protecting your property. Sometimes hidden costs pop up too, so you need clarity.
What about the legal side? Regulations in Thailand.
That's a big one. Short-term rentals, especially in condos, can be a bit of a gray area legally in Thailand. The rules aren't always crystal clear and can be interpreted differently or changed.
So not always straightforwardly legal.
It can depend. Sometimes specific licenses are needed, and the laws often favor the hotel industry. Enforcement can vary too. It's complex.
And foreign ownership rules?
Also complex. Foreigners generally can't own land directly, so for villas, it usually involves leasehold structures or setting up a Thai company. Condos are simpler. Foreigners can own them outright, but only up to 49% of the units in any one building.
Sounds like getting legal advice is essential.
Non-negotiable. You absolutely need a good lawyer specializing in Thai property law before you even think about buying, especially in Kata. Getting it wrong can be costly.
And the market itself can be volatile, right? Because of that reliance on tourism.
Exactly. We talked about seasonality and global events. That means occupancy and income can fluctuate significantly. It's not a guaranteed steady ride.
So investors need a buffer.
Definitely need a financial cushion for the quiet times or unexpected downturns. Maybe even think about diversifying investments rather than putting everything into one Kata property. Things like global economic shifts, political situations, even natural disasters can impact the market.
Let's do a final compare and contrast. Condos versus villas in Kata, thinking strategically.
Yeah.
What's the bottom line for an investor choosing between them?
Okay, bottom line, condo, probably lower entry cost, potentially simpler management if services are included. Good starting point, maybe?
Yeah.
Villa. Higher income potential, definitely. Attracts a different market segment, often willing to pay more, but higher purchase price, and a much bigger responsibility for maintenance and upkeep.
So it really depends on budget, risk appetite, and how hands-on you want to be.
Precisely. No single right answer. It's about matching the property type to your specific goals and circumstances.
Those luxury properties, the really high end.
They cater to a niche premium market. Potential for very high yields, yes. But the initial outlay is huge, running costs are significant, and guest expectations are sky high. You need flawless management for that to work.
Final strategic choice. Long-term versus short-term rentals in Kata.
Short term, like Airbnb. Higher potential income, especially in high season. But much more work marketing, guest interaction, cleaning turnover.
Long-term, more stable, predictable income. Less day-to-day hassle, but generally lower yields than successful short-term letting.
Again, it comes down to your priorities. Maximum income versus stability and less involvement. What fits your lifestyle and investment goals best?
Okay, so for listeners ready to jump in, aiming for Airbnb in Kata, what concrete strategies can they use to actually maximize their returns?
Right. Actionable stuff. Number one, as we keep saying, location, location, location within Kata, near the beach, near amenities that drives rates.
Number two.
Presentation. Make sure the property looks great. Fresh paint, good furniture, and, crucially, amazing photos for your listing. First impressions count hugely online.
Third.
Pricing strategy. Don't just set and forget. Use dynamic pricing tools. Watch the competition. Adjust for seasons and local events. Be smart about it.
You stress location.
Yeah.
Any finer points within Kata, beyond just beach proximity?
Yeah, think about ease of access to shops, restaurants, maybe public transport. Consider the vibe of the specific street or area. Is it noisy? Family-friendly? Also, actual views matter. A sea view always helps.
And making the property itself more appealing, creating a great guest experience.
Little touches make a big difference. Unique amenities, maybe a barbecue, a coffee machine, good Wi-Fi, it's essential now. Excellent customer service, be responsive, helpful, maybe a small welcome pack.
Cleanliness, too, presumably.
Absolutely non-negotiable. Spotlessly clean and well-maintained. Things need to work. This is where good property management is vital if you're not there yourself. Bad reviews on cleanliness can kill your listing.
Finally, let's hammer home those legal considerations for Kata investors. What absolutely must they understand?
First, Thai ownership laws. Foreigners and land understand the restrictions. Leasehold, the 49% condo rule, Thai companies. Get proper legal advice on the right structure for you. Don't guess.
Second, the short-term rental regulations specifically.
Yes. Acknowledge the gray area. Understand that daily, weekly rentals, especially in condos, might technically require licenses that are hard to get or might violate condo rules. Check CATA-specific regulations and be aware of the risks and potential penalties. Ignorance isn't a defense.
And third, navigating local rules and admin.
Be aware of local taxes on rental income or property ownership. Understand building permit requirements if you plan renovations. Respect community rules in condo complexes or estates. Building good relationships locally can sometimes help smooth things over. So, pulling it all together from this deep dive on Kata Airbnb yields, what Ocean Worldwide's extensive experience suggests are those typical growth ranges, around 5–8% for condos, maybe 7–10% for villas.
But those are just starting points.
Yeah.
As we've discussed, so many factors influence the real return.
Absolutely. Tourism trends, the exact property type and its specific location in Kata, those huge seasonal swings, they all massively impact your bottom line.
And that crucial difference between gross yield and the much more realistic net yield, after all costs are deducted. You have to focus on the net figure.
Couldn't agree more. Doing thorough research, really understanding the local regulations in Phuket, especially for Kata, and keeping constantly updated on market shifts. That's the advice you get from seasoned experts like Ocean Worldwide, leveraging Sandra O'Neill's experience helping thousands since 2004. That's essential for making smart moves here.
Okay, so here's a final thought for you, our listeners, to chew on as you consider Kata. Thinking about this dynamic tourism market, the evolving rules in Phuket, what are the most creative, perhaps more sustainable strategies an investor could use? Strategies that not only chase strong rental yields in Kata, but also genuinely contribute positively back to the local community and help protect that beautiful environment. That's definitely something worth pondering as you move forward.